Hey everybody, welcome. Welcome to the afternoon session, live market analysis. Get to take a look at everything that's going on here and take a look across the markets and see what all is going on. Apologies for the long pause in content. I was down and out would be an understatement. Completely lost my voice. Was just sick as a dog for the past couple days, but we are back. It's still a little bit raspy in the voice, but for the most part, pretty solid. So we'll give this another shot. We've got some updating to do because, of course, the only updating we have done to these longer time frames has been in the live Trader in the morning session for members. So we will have a couple things to cover there. Now, before we jump in, as always, make sure to swing on over to slingshotfutures.com, scroll down and click on the live Join the Daily Outlook newsletter. From there, you're going to be able to register for our email newsletter list. You'll be notified every time one of these videos comes out. Along with that, in the email itself, we go over a bunch of stuff that we don't have time to cover in the video, and that's going to be everything from stocks, options, crypto, forex. If it's moving, it'll show up in there at some point, so make sure to sign up for that if you haven't done so already. Along with that, if you haven't had a chance to come into the live trade room with us, click on the live trade room subscription and trial info where you can sign up for a free 3-day trial in the room so you can hang out with us for a few days and see what it's all about. Really great way to kind of get your feet a little bit wet, ask some questions, and just kind of hang out with us for a few days and have some fun while we trade the markets. Now, jumping in, first of all, Euro on the list here. The Euro has had some pretty decent corrective phasing to the upside, but has cycled off of the 618 to the downside. Now, you know me, we always talk about how I'm not a big fan of just one thing by itself, right? So a fib level by itself, anything like that, not good enough. But what we can do is we can go back in time here and draw a line across that and see if anything lines up. And guess what? We have support, a little bit of kind of congestion support, and resistance. Obviously, this level is more than just a fib level here, and the market responded in kind with a very heavy bear move to the downside over the past day and a half or so. So a good amount of bearishness to the downside, looking for the sellers to continue this drive down while they're looking for objectives lower. Now, those objectives, they come in a couple different forms. First of all, a primary objective is going to be just breaking a previous swing low. When buyers are trying to get something going, they are generally trailing up along with those swings. You know, a buyer who buys in down here and they see this rally up that big bull bar, they're probably going to put their stop here, and then they'll put their stop there, and they'll keep going along the way. Well, more recently, we just stopped out some of those buyers. So we're getting some of those buyers out of the way. Now, when a buyer gets stopped out, what does it turn into? A sell order. Right? Now, generally you'd think, well, if there's a bunch of sell orders there, why didn't it break down? Well, this is why we like watching these areas, because it was absorbed, right? Buyers came in and bought all of those sell orders that came in there and shoved the market right back up again. This is why we need to take these levels out with conviction. Just a test and a fail like this, that's not good enough. That actually shows us that the buyers might still have a shot at this, which is obviously what we don't want if we want to see bearish continuation. So really what I'm looking for here is for the sellers to break down through this level. We had a strong test of it. We've got a really good bear drop to the downside, 3 consecutive very heavy bear bars, but then we trap that low and it immediately bounces back and takes back almost an entire one of those bear bars. It's going to be a little bit of a juggling act here for a bit until we kind of get this stuff out of the way. The one thing that I really would like to see is maybe a small correction internally, retest maybe this little swing low that formed inside of there that does seem to coincide with some other levels of support or resistance as well. So a little snap up into testing support, well, once support, now resistance, to turn it back down would be favorable in this case, just because we do have proof that the buyers are trying to defend this low with a push back up. Now, again, you know, that said, is that going to be enough to put in a bottom? Overall, we're pretty much in a range. The market really hasn't given us any other reason to believe much more than we're probably going to be cycling down to the lows of the range, but it's just a matter of what kind of proof they want to show up here now that they have that little bit of a trap low. So I'm looking for a little bit more bearish continuation to the downside. The 61.8 stays on there because they did hold it really well. I have no reason to remove that level, but we do have new resistance at 375 and 280. Those are the last 2 big bear spikes to the downside and the pause and continuation. So if we can get a little bit of a correction up, again, I wouldn't mind seeing some resistance forming around, you know, it's a variable area, around 24.010. It looks pretty good. We can make this an orange, big, thick level here so we don't forget about it. And that's kind of the zone that we're looking for in terms of testing as a level of resistance to push the market back down again. Overall, though, the euro is looking pretty good to the downside, and I would like to see a little more continuation of that for them to grab down and push towards the next area of support, which is going to be down here at the next major swing low. We'll see if they can trap that one. Come on, minimize. There we go. Looking over on gold, gold had a fantastic fall off of the highs. Left nobody behind, that's for sure. That thing rallied all the way back up, and it held the resistance levels we had marked up earlier back here, and it actually never closed above them, but we created a new level of resistance on this drastic drop off of the highs, creating resistance at 59.4, and it did also test that 66.1 level of resistance from way back here the last time we saw a big bear drop, and then after that we've got a little further up here. But that level at 66.1 never broke above, well, it broke above it, but never closed above it, and failed back lower again. So I am looking for more bearish continuation to the downside here. 59.4 is the new level of resistance, so that creates kind of a zone of interest in here for the market to attempt to try to hold if it even comes back. The big thing that I'm looking at here is seeing the sellers so aggressively bearish. It would be a little bit of a surprise not to see a secondary leg. You know, a couple days ago, I would have said the exact same thing about the buyers here. With the buyers being so persistent to the upside, it's a little bit of a shock not to see a secondary leg. And what that means is, right now, what we're seeing on gold is a low probability scenario. A low probability in the sense that the buyers did not continue another leg up. And that means that with a low probability scenario, you tend to get a little bit of extra movement. Whenever you have a low probability scenario like the buyers not continuing the rally up here, you tend to find a little bit more bearish continuation in the opposite direction. If it does break down, I'm anticipating more than just one spike. So I am looking for this bear leg, a correction, and a secondary leg down, which could put us, you know, just down to support at 35.6, or it might put us all the way back down into the cluster support down here at around 30 is kind of the median. One way or another, though, sellers have definitely dominated the gold market off of the highs, accumulated pretty much everything at the top, and just slammed it to the downside. So I am looking for the sellers to continue this drive lower. Again, it depends on where we get the bounce. We don't even have a bull candle yet, so it's kind of hard to measure anything. But if we do get a bull candle, let's say something like this, then you could be looking for an AB equals CD kind of leg, which, again, could put us in a lot of different places. But we do have support along the way as profit targets for sellers to try to collect. Left to wait and see, but for right now, the bears definitely look pretty good on the downside. And I think pretty good is a little bit of an understatement here off of those tops. Jumping over on crude oil. Crude oil is, I mean, literally, this is a perfect channel. I don't think I've ever seen a channel look this good. You know, the channel that we had drawn up is from low to low, copy-pasted on the highs. Not only do we have a really beautiful test, with a perfect test, mind you, right inside there, that then came down to the lows and gave a perfect test at the bottom, and then came back up to the highs and gave a perfect test on the top. Been a long time since I've seen a channel that looked that good. And, you know, overall, does that give any more emphasis to it? Not really. It's still a channel, but if you're looking for one to take a picture of, to add to your wall of different tips and things that you need to be looking for in the markets, this is the kind of channel that traders just dream about. You don't get channels that look this clean that often. More often than not, they get a little bit choppy like this where they miss it. You don't end up getting a perfect test like that afterward, but they tend to be a little bit choppy or raggedy around the edges, and man alive, this one is a beauty. The overall bullish momentum to the upside has already had a continuation leg. We had that big spike up, a small little pause, and then another good breakout to the upside. In the grand scheme of things, we could break this down and say, you know what, we've got leg 1, leg 2, and leg 3, and we might be looking for a little bit of a pause. I don't necessarily disagree with that, and I'm sure a lot of traders will be selling at these highs, not only buyers taking profit, but new sellers trying to sell off the top of the channel. For me, I look at this and say, you know, yeah, that we could kind of subdivide this into 3 legs up, but at the same time, this could all just be one humongous leg higher in the bigger trend if we look previous, right? So here we have 1, 2, and 3. Either way, we are putting in a little bit of a 3-push wedge top. It doesn't matter how you draw it, we are putting it in, and there is going to be likely, not necessarily a selling area per se, but an area that buyers are very likely going to take profit, which inherently does mean selling. But when I say selling, I mean new sellers coming in to try to shove the market down. We don't necessarily have that yet. And I think before we see the sellers really come in, they're going to need to provide some excess proof. Excess proof in the sense of a strong breakdown, excess proof in a really strong trap above these highs, something, right? This right now isn't good enough for me to want to jump on the sell side and hold on for dear life, just hoping that it goes in my direction. I would rather look at this and say, hey, it's a really strong bull trend. I don't really want to be the one to jump in front of that in that bus, just in case it runs me over. Level of support below is possibly a buying area at 65.32. Of course, the major buying zone a little bit further at 64.12. That's that cluster area of support and resistance for quite a while, and it wouldn't be that bad of a look to it if we can get a pullback to retest that for a continuation bounce. Kind of similar to what we had over here. We had a strong breakdown, retest, continuation. Right now, you know, if I were a buyer on crude oil and I see that we're at the top of the channel and we've pulled off of the channel after a perfect test, if I am a buyer and I'm still holding, guess where I'm looking to take profit? A retest of the highs. So for right now, what I'm looking at is a retest of the highs to be a potential failure up here above 67.45 for possible selling. Now that's more introductory selling because we do have a strong bull leg to the upside. Wouldn't be surprised to see a secondary test, but above 45 I have to assume that sellers are probably going to come in, both new sellers trying to pick a top and also buyers who are taking profit who missed the original chance back here. We do have a very strong leg to the upside though, so you know I would rather be a buyer on the pullback. We just kind of have to give it a little bit of time and see what they want to do here. Over on the S&P has had a lot of back and forth. This level of support and resistance here at 56.75 held really nicely for a very long time. We had a lot of support here, resistance, kind of got a little shaky right inside there, but overall resistance, lots of resistance. Now they're trying to break above it. The last couple times we've seen them break above this level, it got magnetized and sucked right back down again, right here. Maybe we see the same thing. You know, maybe not. The big thing that really stands out for me is we still have this wide open area of resistance that I've been waiting for quite a while. We started talking about that, what, back here or back here? I want to see a little bit more continuation to the upside to get into this zone of interest so we can start looking for longer term selling opportunities to try to drive the market back down again. Everything's still looking pretty good. 79.5 up to 87.25 is that zone. It's just a matter of whether or not the buyers want to get up there first and then turn down, or if they just end up failing, because like I said, every time we've broken above that has been a failure, and it led into a pretty steep correction down. If this does end up starting to fail, every time it's done it so far, it's usually kicked off by a big bear bar breakout, so that would be kind of the context that we'd be looking for a little more continuation. We have a big bull breakout bar above. If we get a strong bear reaction move over the next, probably not the next 45 minutes, but over the next couple 4-hour bars, we may be able to look for a short-term drop to the downside to potentially fill in that gap at 26.05 that's been resting there for quite a while now. That would be potentially the downside target. It might even be a little bit further down below some of these other previous swings back towards 25.80. One way or another, though, we're looking for a sell up here. It's just a matter of where it lets you get in for the opportunity to short, rather than you know, anything else really. So the S&P looks pretty good there. Let's drop that out of the way. Take a look at the bonds. Now the bonds have had a little bit of a stumble off of the highs. They tried getting a breakout move to the upside, putting in a new wedge top, but for the most part, just a complete failure. Very similar to what we saw in gold, right? And that's because it both happened on the FOMC news announcement. But they had that quick snap up, held resistance, and dropped right back down again. Big bearishness coming in and chopping straight through support that was resting here at 147.24. Next level of support's a little bit lower, right at 145.01. Maybe we'll be able to see a little bit of bouncing there. That would be an area that the buyers will likely defend, because that's where the buyers came in the first time around when it started rallying in the first place. So any buyers that are still kind of remaining, or maybe they bought in and they're looking for a reason to get back in, or maybe add a little bit more. You know, maybe they bought here and took some profit off and they're running kind of on a lean position size right now. They want to add a little more. What better place than right where they got in already? So assuming that that is the case, buyers are likely going to be defending 145.01 on the bonds and looking for kind of a bounce back up to see if they can get back up towards those highs. Now, you know, am I expecting a bounce and then it flies through the top? Not really. We're a little overextended up here, and the fact that we have above this channel, right, if we draw this channel up here, We broke above the channel high after testing it, broke out above, used it as support, failed the breakout, broke back down, held the inside, and now we came back and held the inside again. I'm not looking for a long-term bounce here off of 145.01. I'm more so looking for a bounce back up to retest previous levels of support as resistance, and then from there, potentially looking for continuation to the downside to get this big objective down here at 144.20s or so. So, even though we do have potential for both sides, buying and selling, I think there's a lot of different ways to play this, and I'm looking to play some of these smaller moves, think on a faster time frame, like a 5-minute chart, 15-minute chart, because it is the bonds, it's a little bit slower, but that's kind of the platform that I'm looking for here. So that all looks hunky-dory, all good there. Now, some of the other markets that we've been keeping tabs on would be on the agricultural side of things. Now, the ag markets have had some pretty good movement overall. Soybeans, namely today, catching some really, really nice movement. And that's kind of the emphasis that I'm looking at right now, is that those markets may want to try to continue. Now, if I drop this down a little bit here, get this over here, you can see that I am currently short on KE, that is the Kansas City hard red wheat. I'm looking for a target back down to towards the lows at the moment, but this could be days. At this rate, it feels like wheat's really slow. Probably not going to be today that target gets hit. Maybe that would be nice to see that dip lower, but I am looking to build positions for the short side on the Kansas City wheat. But that's not the one that we generally talk about. We're usually talking about things like the regular wheat or the regular soybeans and some of the other ones. So if we look at some of the wider charts here, let's take a look at wheat. Now, wheat did have a little bit of a gap up, an attempted run higher, and a failure. That failure up there kind of speaks volumes, right? That's the kind of failure that we don't necessarily want to see when we're looking at a gap up, right? That gap up's a little bit of a problem considering that it failed. So looking for the market to potentially recoup that gap fill and maybe even go a little bit further down. Now, you know why I'm short on the other wheat. The other wheat's a little bit more volatile, offers up a little bit better profitability. Either way, they're looking at about the same thing. A gap up failure, looking for a continuation to fill the gap and then bounce back up from there. It's definitely a possibility. You know, overall, wheat for the most part is still maintaining an okay bull trend, but this really strong kick higher here has me nervous that we might be dealing with somewhat of a let's just say exhaustion, right? That type of exhaustion is not really what you want to see, and they are responding in kind with a big correction down. Assumably, if buyers are looking to get in this, I'm sure buyers will have been looking to buy into that pullback around the moving average cluster. Secondary buyers waiting for excess confirmation will be looking to buy this next one. So we've got a little bit more proof to go here on wheat before we really start seeing the buyers slam in, and I would love to see that gap fill down at around 472 quarter or so. Now, another one that we talked about a lot was corn. If you look over on corn, we were expecting a little bit of bullishness here for continuation to the upside. What we weren't expecting is that all of that news broke out with President Trump and missiles getting sent over to Syria and blah, blah, blah. A bunch of fundamental stuff got hit, and all of the markets, not just the agricultural markets, but all of them had a big gap down, so we ended up kind of starting back over again. We're talking about how this really strong bull bar here was looking good for continuation, and then it gapped back down right back to where it opened up before, and they had to do it all over again. So that creates a situation where, you know, they gave it a shot, they had a beautiful bull bar to the upside, but then it sort of reset their position. Now they've got to do everything again. You know, they're going to be a little bit exhausted after a move like that, so it's not a big surprise to see them kind of get a little bit tired up here, right? They blew all that they had back here, and when it reset again, then they had to really dig deep and try to shove it up, and by that point, they're just out of momentum. So the market might have to correct now after that big gap down, kind of threw them off a little bit. Primary objective on corn is going to be an actual physical test of those highs, which is, let me get an exact level for you here. It's going to be at 393 quarter. We haven't hit it yet. It has come close, but hasn't hit it yet. So that's kind of what I'm looking for there. A couple other ones that we were keeping an eye on were Twitter, TWTR. We were talking about how this dip down was likely a sympathy dip with Facebook getting slapped. Facebook is now finally released. Zuckerberg is out of court, so he doesn't have to worry about any extra, hopefully at least fundamental news that comes out and throws everything off. But for the most part, Twitter is catching a nice bounce. They had that gap fill, beautiful bounce off of 26.91. Really hard to be upset with that kind of bouncing. I would like to still see 25.24 but there is a chance that we might not get that, given the strength off of 26.91 and the fact that, you know, right now it looks like we had a big bear move down that failed. When they tried breaking out below it, that failed as well. So the best that the sellers might be able to get now is just in hopes that they can get out at break even with a retest of around 91 again. So 26.91 is becoming a little bit of a line in the sand now, maybe a little bit further up. We could probably mark this up to, I would say 27.39 now as an area of interest if it does end up pulling back. Thank you, Chart Alert. Over on, what were some other ones that we were talking about? Tesla? Tesla did catch a very strong bull bounce off of that 259.74 area we were talking about, made it back up to 295. I mean, picture perfect. I don't think we could have scripted that one any better. Worked out beautifully for a bounce back up, and, well, yeah, can't complain. In terms of larger or longer term upward objectives, you know, I would love to say back up to 390s into 400, but realistically speaking, I would be looking for 320s next. And if they can start breaking through 320s with some conviction, we might be able to catch a lift back up towards 360. But we definitely have a long road ahead of us on Tesla before they can really start completing these objectives. Either way, the buying opportunity at 259.74 has already met more than enough of an objective at 295. Now it's just kind of icing on the cake. Another one that caught a lot of movement today was Hog. Now it doesn't really show on the daily chart here, but Harley Davidson catching a lot of movement to the upside with a quick spike higher on some talk on activist movements and stuff. It had a lot of movement back and forth, and it ended up just kind of closing back down to where it was before. So Harley Davidson is looking okay, I guess. They may be trying to put in a bottom, but for the most part, this is still very, very bearish, and I don't necessarily want to go against that. I think Harley, along with pretty much anybody else that creates anything, GE, Ford, Boeing, anything that has to do with steel, and guess where I'm going with this, all the tariff talk, a little bit of a kink in the hose here for some of these market participants, and that's going to cause some issues for them. So I don't think they're out of the woods yet. And speaking of which, United States Steel Corp, we are finding a little bit of a range after that drive down. This is where they need to make a decision, right? Is this a bear flag and a continued break to the downside to next levels of support at around 31? Or is this a potential bottom and they're trying to catch a reversal? Excuse me. That's kind of what we're waiting for right now when it comes to X or steel, U.S. steel. Outside of that, though, you know, for the most part, everything is still looking pretty good. Facebook, I still don't really want to touch with a 10-foot pole or a 100-foot pole or a 1,000-foot pole. I'm staying pretty far away from Facebook right now, but, you know, it is catching a little bit of rebound. I think a lot of the pressure is off now. Not necessarily off, but I think a lot of traders who may be holders of Facebook are thinking, oh, man, finally, Zuckerberg's out of court. We don't have to deal with this stuff anymore. I don't think it's necessarily out of the woods yet. But I think a little bit of pressure has kind of come off the shoulders, so I think you're seeing a little bit of a relief rally here more than anything else on Facebook. Still not interested in it. I would rather let it do its thing until I am a little more in a favorable position. You know, long-term investors, again, you know, this big dip to the downside could be seen as cheap, and a lot of buyers, I'm sure, have bought into it, especially given the rally up. But aside from that, I don't really think there's much else that I would want to do here. So that's really all I'm looking at right now. I'll give a couple minutes here, type in the any questions that you may have, and then we can go from there. Again, I am still short on KE, that's wheat. I can maximize this since nothing else is going on here. Looking for a downside objective at around 2.25, maybe a little bit further, you know, around 275, 2.25. I wouldn't necessarily mind even potentially holding on to it for a longer period of time, or a couple days, and see if we can get a stronger move lower, but we'll have to wait and see. Currently looking at around 2.25 though. So I'll give you guys a little bit of time here, type in those questions and any markets that you want me to review. And if I don't see anything, we'll probably cut it a little bit early. Again, my throat's still a little screwed up, so I'm trying to take it as easy as possible. Sorry for the little bit of glare here. It's the green screen is getting illuminated from my monitor, having a little bit of an aura going on over here. But yeah. Aside from that, not really seeing anybody typing anything in or anything. So hopefully you all had a good day of trading. For me personally, this is the only trade that I had today. I don't really have anything else going on. Everything was really slow today. It was kind of rough. Not necessarily that that's a bad thing, especially when you're sick. It's always kind of nice to come back to something that's not so intense. But at the same time, it would be nice to see the markets moving. We did have a lot of opportunities today, but the problem was, especially on crude oil, we had a lot of issues where it just kept finding some selling volume, but directly into a level of resistance, which is definitely not what I want to see. You know, we were looking at over here how the sellers on crude were trying to get a bear move to the downside, but there was a huge block of support at 44, and that kept causing a whole bunch of issues. So mostly just range fade opportunities down here. A little too aggressive for a small account challenge that we've been doing, but for larger accounts, definitely probably had a heyday. Certainly not going to be too upset by a good moving day on crude oil. It never fails, though. The afternoon session always seems to be better than the morning session lately. There's not much I can do about that. I wish it would be a little bit more awake during the morning session, but well, we'll take what the market will give us, and right now the market's not giving us a whole lot on crude, so oh well. All right, well, that's going to do it for today. As always, you know, it doesn't matter what market you're trading. Always make a plan, trade the plan, follow those rules, and you do just fine. If I missed your questions or if I didn't see them, feel free to send those to me in an email. Again, double check the little button underneath the video here so you can click on subscribe so you don't miss us going live again. You can also click the little bell icon next to that so you'll be notified anytime anything happens. But aside from that, enjoy the rest of the day, rest up, and we will see you all tomorrow. Have a good one.